This video is about how to set your trading system for best results. This is a trading strategy, when to enter and when to come out. I titled this particular tutorial the 60% to 80% ever winning trading strategy. This strategy that I'm about to show you is a 60% to 80% winning strategy. All right, let's get to it. Getting here means you mean business, you mean trading business, and you are almost ready to make a difference in your trading career in the Forex market. This lesson is going to reduce your trading or your entire trading work. The trading setup that I'm about to show you, it's so powerful that if you practice it well and develop the discipline and patience for it, the result is just overwhelming. This strategy is very effective and is very successful. All you need to do is to follow the instructions to the core and be patient. You need to follow the instructions to the core, and you also need to be very patient with this strategy. It's very difficult to know which indicator to use or what kind of combinations of indicators to use that will give you the best indication as to when to buy or when to sell. But this indicator that I'm about to show you does the work, and it's so simple because it has a lot of things in one. It operates different things as though they were one. All right, so let's look at it now. This indicator works best in 1 hour in terms of entry in terms of entry points or the time that what you actually enter the market, but its exit depends on you. So we'll look at it just now. All right, this strategy shows you when to enter the market and when to come out. There are two main things that you need to follow for this strategy to work best for you. Never be early and never be late. Just follow this strategy. All right, so right now let's get the indicators in. How do we get these indicators? There are 3 indicators that are combined to give us this setup. So let's first learn how to insert these indicators on the chart for the analysis. Okay, so we come to insert, just click on insert, you come to indicators, and then you come to trend. these very indicators are all trends. So we're going to find all of them on trends. The first one is parabolic SAR. Parabolic SAR. Parabolic SAR. So let's put parabolic SAR. Okay, so this is parabolic SAR. Let's set the parameters. All right. With the parabolic SAR, we keep the parameters as they are. The step is 0.02 and the maximum is 0.2. So you always have to make sure that the step is 0.02 and the maximum is 0.2. Then you choose your style. On the MT4, wherever you see style, it represents colors, so you choose your own style. So here I think I will go with the blue, and then here you choose your font. So let me go second last, and then you click OK, and there we go. We have the parabolic SAR on the chart. All right, how does this parabolic alone work? How does it work? How does it work? This is how it works. It is an indicator that shows you whether the trend has reversed to a buy position or to what? A sell what? Position. The parabolic also stands and it shows price reversals when the dot gets knocked up, that is above the price, or when the dot gets knocked down below the price. And it also represents support and resistances. If we look at it, parabolic SAR, the SAR stands for support and resistance. Support and resistance. So it is parabolic support and resistance. All right, so when the price is resisted, it shows it. It shows it. For example, this dot here. Now I said this system works best in 1 hour time frame. This is the time frame in 1 hour time frame. So you'll see that the 1 hour is highlighted. All right, so the parabolic gets knocked down from here, and it's here now. It was knocked from here to here. All right, when this happens, this is an indication that the price, there is a support. There is a support, so the price couldn't continue going down, so it has reversed. So this dot is showing us a reversal of this trend. As such, we have to be at the lookout to buy. You can use this indicator and it works. So if you see this dot, you can place, you may place your buy, because this is an indication that a buy trend is coming, or a buy trend has come. So the price gets rejected from here, and now it is going up. But this parabolic alone is not enough. For a sell indication the parabolic gets kicked from below here and it goes up. So when we see the parabolic up above the trend, this is the trend, right? This is the trend, and that is the price. Okay, so when it gets kicked and is above, then it signifies, or it shows us that that trend is selling. And when it gets kicked below, then it shows that that trend now is buying. All right, but we need a confirmation. So the parabolic SAR is not enough. It's not enough because we want to be sure and we want to profit 60% to 80%. So we need to make sure that there is a confirmation. So for us to have a confirmation, we need to insert other two moving averages. So we go to insert, we come to indicators, we come to trend, and then we look for moving average. This is moving average, and then we click. All right, the moving average, all right, here we're going to insert moving average 5 and moving average 12. All right, we can insert any one first, but here we have to use the exponential. So the period for this moving average is 12, and then the moving average method, we select exponential, and then the apply to, we keep it close, and then we select a style, which is the color. So let's say yellow, and then we select a font that is visible to give us a good representation. Then once we're done, we click OK. So here we are with the exponential moving average 12. All right, let's go back to the same insert, and let's insert the 5. This is the 12, and then let's insert the 5. So we go to insert, we go to indicators, and then we come to trend, then we find moving average. Good, so this is it. We click OK. It brings us to this page. So now we change the period from 12 to 5, and then on the MA, moving average method, we choose exponential, and then apply to, we choose close, and then we choose a style, a color. So let's say red, and then we select the font here, and then we click OK. Good. So now we have the exponential moving average 5 and the exponential moving average 12. So this is the 5, the red is our 5, and then the yellow is our 12. All right, now how do they work? Good. So let's say for a buy signal or a buy confirmation, before we place the trade, there are two conditions. First, the dot has to be kicked from up so that it is below, like this one. The dot got kicked from here and is below, and we can see another dot. All right, so when this happens, we don't immediately enter the trade. We have to wait for a confirmation from the EMA 5, that is the exponential moving average 5, and the EMA 12, the exponential moving average 12. They have to cross. Here you can see that they just line on each other. They have to cross properly. When they cross and they are opened, when they cross, opened up, okay, so that the exponential moving average 5, which is the red color here, it's above the exponential moving average 12, which is the yellow color here. When this condition is met, then you can enter the trade, and you'll be rest assured that you will make profit. So let's give it a bit of time. Let's wait for it a while. Let's wait for it and see. Okay, I already have a trade here. I already have a trade here, so you can see it's giving profit here. All right, but still, so basically, for a buy, yes, come in. All right. So you keep watching these two moving averages, the exponential 5 and the exponential 12. Immediately they separate, or they open up here, then a signal has matured for a buy. Okay, so this will be for a buy confirmation. All right, let's try to look for a different pair. Let's look for a different pair. All right, let's use this. Let's use this so that I'll use it to explain both the buy and the sell strategy. So what are we looking here? We're looking at when do we enter a trade and when do we exit a trade. So for a sell signal or for a sell entry confirmation, we have to see that the dot gets kicked so that it is above this parabolic SAR, so that it is above the trend. This is the trend. That is the first condition. Then secondly, the EMA 5 has to cross so that it is below the EMA 12. So this is the EMA 5. You can see that it is below the EMA 12 here, right? The yellow color is the exponential moving average 12, which is the EMA 12 in short, and the red is the EMA 5. So for a sell signal for you to be sure that this is a sell signal and that you're going to profit 60% to 80% from the price movement, you have to make sure that the dot get kicked so that it is above the trend, and then the exponential moving average 5 crosses the exponential moving average 12 so that it is below it. And when that is done, the signal has matured, then you can place your trade. So for example here, I can now place a sell trade. Okay, I can now place a sell trade. Now immediately you place the trade, you have to secure, or you have to ensure against what? The trade. This is it, GBP USD. So you have to place your stop loss for this sell position. How do we do that? You just have to right click and place your stop loss exactly above, just a little bit above this first dot. Alright, so let's punch in that price. That is 1.29891. Alright, so we click OK. So let's remove it. So this is our stop loss. That is $520. Alright, why is our stop loss here? For this trend to reverse and be against this trade, or for the sell trend to change totally, is when it's able to break above this first parabolic SAR. So it's easy to locate where to place your stop loss. That is to place the stop loss just a little bit above the first parabolic dot. The first parabolic dot. The first parabolic dot. That is the most basic point of placing your stop loss. Secondly, you can place your stop loss above the highest resistance. The highest resistance, which is here. The highest resistance before the EMA 5 crossed the EMA 12. That is the resistance that came, this one. So you can put your stop loss here, otherwise this is the best place to place it, just a little bit above the parabolic SAR. So this is how you place a sell trade. Now you have to be very patient, because this can take a lot of hours to mature and to give you good profits. Now this time frame is in 1 hour, and we said that and I said earlier on that 1 hour is the best time frame to use this setup. So each dot here represents an hour, each dot. So we can count the hours that this trend has been moving downward. 1 2 3 4 5 6 7. So for 7 hours now it's been moving down. Okay, so you have to take note of that. Alright, so this is how the EMA 5, the EMA 12 and the parabolic, this is how they work together for a sell position or a short position. You have to see these two conditions. One, the parabolic has to kick so that it is above the trend, like this. and then the EMA 5 has to cross so that it is below the EMA 12. When this happens and it opens up, you place the trade. You place the trade, and you have to be patient with it. You have to be patient with it. All right, let's look for another. All right, now let's look for a buy signal. It's the same thing. These two conditions will have to be met. For example, in this condition, the EMA 5, or the exponential moving average 5, has already crossed the exponential moving average 12. But you don't have to enter the trade now. You have to wait for the second condition to be met. That is this dot being knocked down. When this dot gets kicked so that it is below, then a buy confirmation has come. All right, you always have to make sure that the two conditions are met. It can be the dot being knocked first before the EMA 5 crossing the EMA 12, or the EMA 12 or the EMA 5, sorry, let me take that again, or the EMA 5 crossing the EMA 12, then a confirmation has come. So for instance like this, it crossed first and then the dot has kicked, so this shows that it is going to buy. So what do? We go to place a trade for what? A buy. And this is a fresh indicator. This is a fresh one. This entry point is fresh. So let's look for, okay, here we are, so that we can give it a stop loss. So where do we place the stop loss? Exactly below what? This dot. So let's use this price, which is below it. So that is 113.640. Good. So here we are. We have a stop loss here of 399.70 US dollars. So we can monitor this trade and see. So it is easy for you to know when to place trades when you are using this setup. This is a very profitable setup, but it requires a lot of patience. You can see it's already giving profit. It's already giving profit. It's already giving profit, but it requires a lot of patience, like I said earlier on. So this is how we place a buy using this setup. Okay, let me use the history so that we can see why this setup is a very good, straightforward setup. For example, I said earlier on that for a buy signal or a buy entry point, for you to enter for a buy, you have to look at these two conditions. One, the dot has to be kicked so that it is below this trend, and then two, the EMA 5 has to cross so that it is above this EMA, sorry, the EMA 5 has to cross so that it is above this EMA 12. If you look at it carefully, this condition was met here. The dot get kicked here, and then it crossed here. This is where it crossed. You can see that it came and then it crossed and it opens up here. So immediately it crosses and it opens up, you place your trade, and then you place what? Your stop loss here. You'll find out that if you had placed a trade, say here, when these two conditions were met, you'll find out that you are going to run in profit all this while. And then the trend turns again. So this here you buy. In this condition, that is a buy. Then it turns again. The dot get kicked up. Right? The dot get kicked up, indicating a sell strength. And then you wait for the exponential moving average 5, EMA 5, to cross so that it is below the 12 like here, and then you enter another trade. You will find out that you are still going to make profit. So that is the history. You can check the history and you'll see that this trading setup works 60 to 80% accurately. Alright, now if we come even to look at this history, you'll find out that the dots get kicked down here and the EMA 5 crossed the 12 and it continued till here. Now mind you, each dot represents 1 hour, so it can stay for long, so you need a lot of patience. If you want to make a lot of money, you need a lot of patience to wait for it to trend. So immediately this happens, you enter your trade, you place your stop loss below here, and you'll find out that most of the times it will never pick your stop loss, because once this condition is met, this EMA 5, the possibility of it running for days is possible, and you can see the evidence here. Alright, let's count the number of hours. 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 22 23 24 25 26 27 28 29. So this trend lasted for 29 hours. It bought for 29 hours before changing for a sell, and this sell was temporary. It was a temporary sell, and then now it's going back for what? A buy. And here we actually caught it well. So once you see this, you see the way the EMA 5 has crossed. You see the gap here between the EMA 5 and the 12. That is a very good one from experience for you to enter the trade and allow it to run, and you place your stop loss right below this parabolic dot. Okay, once you do this, you can be rest assured that you are going to make profits. Alright, now the question is, now we know when to enter for a buy, and we know when to enter for a sell. So now, when do we come out? That is, when do we exit the trade? Alright, there are two ways to exit a trade using this strategy. The first way is to take the profit if you appreciate it. For example, if I appreciate this profit, $17 here, I can just take the profit. Alright, but the professional way of trading this system is to allow it to run until the next dot gets kicked. For example, let's say when the dot gets knocked down here and the EMA 5 crossed the EMA 12, you enter the buy. You have to leave this trade until this dot here gets knocked up, then you come out. That is the professional way of what? Exiting a trade on this trading setup. On the other hand, when the trend is moving, you have to move your stop loss and keep locking the profit. For example, let's look at how you lock profits. For example, this is the stop loss for Euro Chef, and now it's giving profit of $115. So all you have to do is to, like here, we lock up the profit at $32, so we no more have a stop loss, but we have what? A locked profit. We have locked the profit. We have locked the profit, so that when it reverses, it doesn't come to take what? The loss. So as the price rises and the profit increases, we adjust the locked profit as such. We have to, okay, so as the price rises, the profit increases, and then we also adjust the locked profit. Alright, but you have to be very strategic in locking the profit so that it doesn't take it easier. When it takes it, it doesn't take it earlier than expected. So but when it takes it, all you have to do is to replace the trade if you think there is a possibility of the trend continuing that position, say this buy position. Alright, so basically these are the two ways to exit the trade, but how to place the stop loss remains the same. That you place the stop loss right above the first parabolic here, or you place the stop loss just above the resistance that appeared before the EMA 5 crossed the EMA 12. But the professional way of placing the stop loss is above the parabolic dot. Alright, you have to be very patient with this strategy. It works. The 40 to 20% losing part are like these areas where the trend really didn't move. It was just a bit jumpy, okay, or this, for example, this short movement here, and you'll find out that if you are patient enough and follow the trend or follow the strategy these things don't catch up with you. For example, the EMA 5 did not cross the EMA 12 here. So what it means is that it wasn't a confirmed buy trend, and that is why it came down again. It continued what? The downtrend. So always make sure that before you place the trade, the EMA 5 has crossed the EMA 12. Okay, it's very, very, very important. It's very, very, very important to always note that, like this one, there is no doubt here that it is going to what? Buy. The only thing that can change this now is maybe an economic news. And that is why you also have to check what? The news. In the other videos, how to trade the news and how to check the news on a daily basis, all those things are explained there. Try to understand them, and then you can use all of them as a whole in order to profit. So this, we can leave it for hours. So basically, this strategy is a very powerful strategy. If you practice and master it and develop the discipline to using it, it is going to give you a lot of profit. Now, this strategy works the same in all the time frames, just that the entry point is best from the 1 hour time frame. Now, how do you know if the trend is continuing? You go to the next and you will see that happening. For example, in the 4 hours here on AUD USD, in 1 hour we can see that the trend is going up and the dot are still below, and the EMA 512 has still opened up. Now when we go to the 4 hour time frame, you'll find out that the EMA 5 is trying to cross the EMA what? 12, and the dot has kicked here also. So each dot here represents 4 hours, and this dot has just come. So what it means is that there is more opportunity for buying, which means the price is heading up. So if you see this, you can still what? Follow the buy. You can still buy. Because sometimes if you look at it from here, you will say, oh, I'm late. But if you come to check here in 4 hours, you'll find out that you are not late. So here you don't have to really delay. All you have to do is to pull what? The trigger, right? You pull the trigger, and then this is AUD USD, and then you place your stop loss the same way. That is let's say 0.73245. Okay, let's say it's 0.73245. Okay, it's sufficient to pick. This is okay. Okay, let's say 0.73460. Now you find out that when you are putting the stop loss and you punch in like these prices, right? and it refused to give you this modification, it means that it doesn't want to take that price, and then you have to redo that again. Right, so let's put here at 0.73675. okay, it's on copy, so let's take 20 here and let's take 20 here, and then let's copy. Okay, let's cancel this. Okay, it's good, we are seeing this here. And then let's now come to 0.73245. It's still refusing. So that's not supposed to be so. It's not supposed to be so. Alright, let's go back and see what's happening. So let's modify this. Try to get the prices correct. So this is 0.73695.